Hello, TikTok, YouTube, Twitch, and looks like Facebook. Facebook today dropped out. Couldn't get up on Facebook, but Jim Malone here. It's Dallas Trading Floor. It is a Thursday. Market is off. Bad jobs report, and it looks like it looks like it did not do well for the market. Just kind of want to go over some of the slides here. For everybody looking here on TikTok, thanks for tuning in. I'm going to be showing some slides on this show, and they're available on Periscope. You can take a look and see what I'm broadcasting as I'm broadcasting it at pscp.tv/Dallas Trading Floor. And also, if you'd like to sign up for the trade alerts, there's free trade alerts. If you're on TikTok, all you have to do is go to my bio and then click on the link, and you'll be taken directly to the sign-up page. So just do that, and you get the free trade alerts. And of course, I'll show you some of the trades I'm making, some profit opportunities, and hopefully you'll be trading along with me and making some money. I hope so, and it'll be a good thing. Also, for everybody on YouTube, just wanted to show you the sign up for the free trade alerts. It's www.dallastradingfloor.com. And there we go. Let's get into it. Basically, we're finally seeing some downward pressure on the market. So today we're off a bit. The NASDAQ is blocked below that very key 1050 level. So the NASDAQ is off a bit today. Quite a bit of a drop, about a 400 point drop. And this is really due to the unfortunate jobs reports. We're just, of course, because of this reopening thing and this COVID thing, a lot of people now it's starting to really trying to hit kind of hitting the wheel. A lot of the airlines are very weak right now. I just saw a interview this morning with the chairman of Southwest Airlines, which is one of the best airlines. It's based here in Dallas. And they're going to try to keep a lot of their people on, but it's tough because the traffic just isn't there in the airlines right now. So there is going to be some rearrangement in the market. Now that said, there was some excellent news. Even though the stock's off a little bit, Tesla's down a little bit today. There was some excellent news that was announced today. It looks like they're going to build their second plant here in the United States, and that's going to be in Austin, Texas, in Travis County. So just south of here in Dallas. And that's where they're going to be producing the Cybertruck. So it's pretty awesome. If you're looking to be in the real estate market, I want to point you to a place where you can buy a lot, and I think it's pretty good. It's called Lago Vista, Texas. Just FYI, I'm probably going to be looking for land there later on this week or possibly next week, because I do think that the most of the other real estate markets are weak, but I think Austin, Texas is going to be pretty good. So anyways, we're in a upward motion here. I wanted to show you the spider. The spider is down. It's at 232, but it's still holding above that 300. So it's still strong. This, as you can see, this is the 50-day moving average. It's definitely above that. But the volume is down, and overall, it is slightly bearish, but definitely the market direction is still in the upward trend. So don't be short anything right now. It's not a good time to be short because that might not be a good idea in a upward trending market. We're still trending up, even though with this jobs report, some of the stocks took quite a hit. So there we go. All right, I want to show you the QQQ, and the QQQ is down the most of all of these. It's down 6.60 today, or about 2.5%, 2.49%. Definitely off, but I think we're seeing essentially a floor at about 250. We'll see if it holds that, but I'm seeing a floor at about 250. So I do think that in the coming days, I think it will firm up. I hope it won't fall too much below this. If it does, then the market may be changing direction. But right now, it's currently up. So that's another thing that you've got to look for. The QQQ is pretty much covers the NASDAQ 100. It's where all the really good big stocks are. That's the Microsofts and those kind of stocks. Now, currently, we have seen an awful lot of investment into this. A lot of safe harbor stocks currently are there. And some of them are backing off a little bit. I think Netflix was down a little bit today. And Microsoft, even though they reported just a tremendous quarter, they are back. They're down a little bit as well. I just want to show you the diamond. The diamond is down as well. And this is, of course, the Dow Jones 30. It's off only 1.21%. It's not been performing quite as well as the S&P or the NASDAQ 100. So, but it is down as well. So all three major indices are down today, and it's partially due to these unfortunate numbers for employment. I wanted to show you a kind of an interesting stock. You said, well, boy, that's really negative. Jim, you're just being a negative Nelly. You're just showing me all negative stuff. Well, I want to show you a stock that's up. Here's a stock that's up even in a bad market, and it's under $10. And by the way, I own this one, so I'm hopefully eating my own dog food on this one. This is Blink Charging, and it's an interesting little stock. It's it's not a top-rated stock because it's kind of an inexpensive stock, but in the low price stocks, it's not doing badly. As you can see, it's being accumulated right here. It still really isn't a great composite rating. It's only a 71. Really, it should be at 80 or better, but because it's such a cheap stock, I'm willing to take a little bit of a gamble on it with this chart pattern. So Blink Charging, I'm in this one, BLNK. And what they do is that they have about 1,000 charging stations around the country at many convenience stores and other places. And what they do is they do a revenue share model with the retailer. The retailer basically has Blink come in, they put in the charging, and then they have an app. And if you have an electric car, Tesla included, you can charge your car. And so it offers a little bit of revenue to some of these convenience stores as a draw for customers. And I do think it's really good. Now, typically the charge costs about double what you would normally pay for electricity per kilowatt hour. But for the convenience, I think it's well worth it because a lot of people that do eventually get electric cars aren't going to have garages that they can plug into. So I think these are going to become more and more popular. But we're taking a look at it. This is the only public company, pure play, in this charging business. There is another company called EasyGo. It's currently close held. It's currently privately held. That one may be good as well. I do think that as electric cars become more popular, you're going to see many of these charging stations around. So Blink, BLNK, is one that you might want to take a look at. I wanted to show you one that I bought yesterday. I do like this stock a lot. It's called Corvo, and it is part of the 5G wave. I showed this stock yesterday on an options play. I actually didn't do the options play. I like this one so much that I went in and I bought the underlying stock underlying stock in this. I'm glad I did because it is up about $1.88 today at 120.32. Very nice chart. It's coming off of a nice base, which is what you want. It's a flat base. It's not the best of the bases. The best base, of course, is the cup with handle, and the second best is the cup without handle. This is a flat base. It's not a bad one. I think that you're going to see this do extremely well in the next few months as we come closer to the time when Apple is going to announce the 5G phone. And I'm predicting that will be probably on the 21st or 22nd of September. That seems to be the time that Apple likes to announce its new products. This is Corvo, QRVO, and there's other ones in this space too. Skyworks is also an excellent play here. But I just wanted to bring this to your attention. It's got a composite rating of 93 out of 99, so it's really quite good. And hopefully it will do well. Now, they are expected to report on the 29th, so I may sell before the report, but I probably will hold through the report because I do have it protected with a call option. So we'll see how it goes. I just want to see if this one's going to move higher. But it is getting new highs, and I think it is well worth your taking a look. And the Investor Business Daily has a stock of the day, and this is definitely one today. So there you go. All right, just for fun, I want to show you my portfolio as it stands currently. I'm going to be moving out of certain stocks at the end of the week on Friday, and it's because I'm going to get called out. I'm probably going to get called out of Tesla, and I'm probably going to get called out of Teladoc. Now, I may go back into Tesla on Monday, but tomorrow will be my last day of Tesla. I have a call option, a 1460 call option on Tesla, so I'm kind of expecting that I'm going to get called out. I'm kind of hoping I don't, but I probably will. I have a 1460 call option, so I'll be called out probably on that. On the audio codes play that I have, it's down a little bit today, about 38 cents. It was up yesterday, so I'm pretty pleased with that. But basically, this is a call. This is a bull call spread, and I'm holding this through their earnings audio because I think it's going to be announcing on the 28th of July. I also, as I said, I also have Corvo as well. And just here's what we're on currently. We're on YouTube, TikTok, Periscope, Twitch, and Facebook. And here are the addresses that you can use on that. So without further ado, I'm going to get to the questions. Thank you. What do you think of August 28th, 17 call on Tesla? You know what? Okay, now here's the thing about buying calls on Tesla. It's going to be a little bit hard. This is a good question. I'm probably going to be in the market for calls. I think maybe, and I don't know if it's possible, I'm going to try to see if I can do a call spread on Tesla. I do think Tesla is going higher, by the way. I just think not right now. It's gonna digest kind of this earnings. By the way, the earnings on Tesla were great. So, considering everybody was saying, the street was saying that they were looking at a 29 cents loss, and it was on the loss. They made money. So there you go. Let's take a look at that. Let's see. You're looking at the August 28th. Let's see. Let me look at the August 28th contract for Tesla here real quick. August, and let me look at the options chain. And by the way, if you want to follow along with me on the screen and you're on TikTok, I'm broadcasting this live on YouTube at youtube.com/Dellis Trading Floor. So let me look at the option here. Okay, that's 17. Let's see if I can get. You're looking at a 28. Yeah, that's good. Give it a little bit of time. Let me move out there to the 1700 strike on that before I pull it up here. So hopefully we'll get it up here. No, it's the 21st. I want to go out even further than that. I want to go out to the 28th. There we go. Okay. So let's see if I can pull up the 28th, the 1700 call. Let me see if there's a good one in there. Okay. Okay, that's trading at about. Let me pull this up on the screen to show you. Let's pull it up so you can see it. Let's see. Let's see if I have the. Let's see if I can go one more here to get to the 1700. It's trading at about 90. Now, the 1660. That's the one I have. Here, let me see if I can go one more. Yeah, see if I can go one more. I can't see the 1700 call, but the 1650 is currently selling for ask of 94.90. That's pretty. That's pretty rich. I think the way I would approach this one, Cayenne, is that I would do a call spread because I don't think you want to pay that much for that call. What I think you might want to do is do a call spread. And I'll see if I can put one together for you, possibly for the next time. But I do think that's just a little bit expensive. I think it's a little bit high risk for a 1700 call. I do a call spread at a lower. I do a bull call spread on that, probably from about. I would probably on this one. I would be buying the 1600 around there, and then I'd be selling the 1700. That's what I would do, and that's going to give you a little bit better opportunity. I mean, you're not going to make as much on it, obviously, but I would do the spread on this one because of the prices. I just think that, this is a little bit tied. This is $91 for the call. That's going to be about $9,100. I just think you could do a better deal if you did a call spread. So that would be my opinion. So let me get back to you on that. And thank you so much for that. That because that's interesting. Tomorrow could be worse. Well, always tomorrow can be worse, but it also can be better too. No, I think what's happening here is that some of the reality is coming in with the unemployment. I mean, it's very disconcerting to see this level of unemployment. There's just a lot of industries like the restaurant industry and like the travel industry that just are going to have issues regarding this because of because of the amount of unemployment. So I do think that that is settling in. So you have to be really careful in where you are in the market. I think that if you're in any of these real estate stocks, any of the airline stocks, I think it's a really bad place to be because I do think they're going to be very, very affected by the lack of employment in the industry, and I think it's going to be a real issue, even going forward. So we have to be kind of careful on that. Let me see if I can take a question from TikTok. I've gotten a lot of interest here. Great. Why is Nikola going down? Because Nikola is not a real company. I'm sorry to say that. I mean, I know that's painful to hear that, but Nikola can't really produce cars. It has investment, but it can't really produce cars. If you want to take a flyer on the electric cars and you don't want to be in Tesla, I recommend looking at Ford because Ford can actually build cars. Nikola can't really build cars, and people are realizing that. What this is kind of a pump and dump stock. I mean, they have some beautiful pictures on their website, but I look at this chart. I want to show you this chart. I just this is not, again, it's just not a viable chart. I mean, I don't. I've been a little bit negative on Nikola, and this is part of the reason why this chart doesn't. Since June, this chart has been in a downward trend. So let's look at the weekly on it. Look at that. It's a blow off top. It's basically a lot of hope, and then reality sets in, and then unfortunately it goes down. So, if you're in Nikola, I would consider selling immediately. Always try to use the 8% rule. If something has declined more than 8%, please sell it, because that way you're going to maintain your capital. No, I don't think Nikola. It might do okay. It might be bought by somebody. I don't know, but they're not going to beat Tesla in the truck business. It's just not going to happen. You're going to have competition from a real company like Peterbilt or somebody like that. You're just not going to have a company like Nikola come in and take that. Nikola doesn't have. I mean, it's a nice idea, but I don't think it's gonna be very good. I would stay out of these Me Too stocks like Neo and Nikola, just because I just don't think that they're really in a position to challenge Tesla at this point, because Tesla is actually really producing a real product. What is my opinion on GE? Well, it's interesting you mentioned GE. I actually have a personal connection to GE. It's kind of amazing. I went to Washington College as an undergraduate, and one of my classmates was Larry Culp. And Larry Culp is now the CEO, if you can believe it. He did much better in life than I did, of General Electric, and I think he's doing a terrific job. He was the former CEO of a company called Danaher, which he did a tremendous job on. He's very, very good executive, and if anyone can save the company, he can. Now let's take a look at the chart on General Electric. I have resisted recommending General Electric because it just had such an awful chart. But I think that now that Larry is there, he's starting to make the changes that need to be changed. Is it viable yet? Well, I'm not so sure it is, but this is a hopeful chart. This isn't a bad chart. Before Larry got there, this is the chart. And then kind of Larry got there, and it's come up a little bit, and it's now flatlined, which is, by the way, a tremendous achievement. It's only down 4 cents today at 701. It's still incredibly cheap. Can you believe this was the stock? This had been in the Dow Jones for 110 years, and of course is not longer in the Dow Jones Industrial, but it's still quite a company. They make jet engines, and unfortunately isn't doing that well. And they have some other quite good businesses, but they need lots and lots of restructuring. If there's one guy that can do it for restructuring, it's Larry Culp. He's pretty terrific when it comes to this kind of thing. So I can't recommend this stock. I can't recommend this stock, but here's the thing. I'm not going to count these guys out because Larry's there, and I think he can make it happen in a few years. What I would do is I would watch list the stock, wait until it goes up above 10, then start looking at it again. It's really not viable in its current configuration, unfortunately. Okay, so my Tesla share, excellent. Well, I'm glad that you've done well. My Apple shares, okay. Buy houses in Austin. Absolutely. This is a very good thing. And by the way, if you want to see some cheap lots near Austin, I'm going to show you just really quickly where you can buy them. And I think if you're a speculator, this might work for you. So let me do this really quickly, and I'm going to put Lago. And if you know the Austin area at all, you'll know that the Leander area is one of the areas that is getting a lot of love from investors. I think you could do well if you went to Austin right now and bought a house. I think that buying north of the city probably is better than the south. But, again, I live in Dallas. I don't live in Austin, but I do go there a lot. I go there basically several times a year. I'm down there and I'm looking for land. So I do think that's not a bad idea, actually. There's most of the real estate markets, I would say, are not so great, but I think buying anything in a residential real estate in the Austin area is a very good move. So my opinion, and I thank you for that very, very much. Okay. Buy Bank America. No, don't buy Bank America, please. No, don't buy any of the money center banks. They're just not good. And I'll tell you why they aren't. Right now, we're involved in what they call deflation. The reason I know this is because the interest that's being paid on the 10-year bond is less than 1%. When interest rates are this low, that is what they call deflationary. So typically, banks do the best when there's an inflationary market. Now, they're up 12 cents, but this is not a good chart. And I want to show you the chart right now for Bank of America. And this is one of the ones, this is what they call a classic value trap. You look at it and you say, wow, I've heard of Bank of America. They're a big company. They're doing all these great things. And they should be doing better. Well, you would think they would be, but they're not. They're not even number one in their category. Morgan Stanley is. And I wouldn't even buy Morgan Stanley. This is not a good chart. This chart is going sideways at best. Bank of America is a well-run bank, but basically the only way they're going to make money in the next few quarters is by cutting, by cutting overhead. So it's not a good situation for them. And I wouldn't be in the banks. It's just too difficult. All right. Hey, hi, Jim. So, you said that the largest spec in the U.S. history. Are you familiar with it? No, I am not. With a PSTH. Now, this has been getting a lot of interest on things like Robinhood and stuff like that. These specs, I just can't get into these blind pools. So, let me pull this chart up. Let's take a look at it. PSTH. See if I can get something up there with that. Okay. Okay. Well, they say that this is the next hot stock may come from the biggest blank check company ever. You may be. I mean, these. This is the Bill Ackerman one. And he's certainly made a lot of money. Bill Ackerman has. I just don't like buying. I don't like buying. He did make a lot of money shorting the market when it went down. I don't know. I'd like to see what they're investing in before I invest in it. It's just me. It is part. Bill Ackerman, has got a tremendous record on Wall Street, and a lot of people wouldn't be investing with him. But I can't in good conscience recommend this because I don't know what they're investing in. I don't know what the deal is. So. I wait to see what they invest in, and then if they invest in something good that has a good chart, buy it off the good chart. Here's the thing. There's too many good ways to make money in this market where you can take a lot less risk than this. Even with Bill Ackerman, there may be an issue. Wait until they find what they're going to invest in and then invest in it. I just wouldn't do that. I just wouldn't do that. Okay, your thoughts on Tesla, S&P 500 inclusion? I think they are going to go into the S&P. I just don't know when. Now, people on this channel have been saying, well, we think that they're going to go in only after a split. I don't necessarily think that's going to be the case. In the last few years, the trend has been not to split the stocks. For instance, Amazon has a valuation, very high valuation. Now, part of the reason for that is because they don't want it to get ahead of itself. If they do split the stock, though, if they do split Tesla, buy it, because it will go up tremendously. I'm almost positive, but I don't know if they're going to split it, because it may cause the valuations to get beyond themselves. I do think that long term, though, Tesla is probably one of the best stocks that I've seen in a while. Now, is it the Holy Grail? I don't think anything's the Holy Grail, but I do think that it is going higher, and I think if they do split the stock to put it in the S&P, it is a definite buy. But I don't know if they're going to split it. That hasn't been the way that they've been doing it. Now, inclusion in the S&P, I think that's almost a certainty now, because Tesla reported its fourth quarter, I guess, of earnings. I guess it was the fourth quarter. So this is the third one. I can't remember if it's third or the fourth, but I'm pretty sure that they're going to go into the S&P. Now, I don't know exactly what date that's going to be. I'll do a little research on it, but I do think they're going to go in. And if they do go into the S&P, it's going to have to be bought by every index fund out there. Now, that's part of the reason I believe that the options are trending the way they are. They're kind of overvalued right now, in my opinion. But I do think it's going to go into the S&P. That's my take on it. Sold Microsoft before earnings. How long? Good for you, Kayed. Good for you. Good for you. This. It's funny. This gets repeated again and again and again. You did absolutely the right thing there, Kayed. And this is just for everybody out there. Even if you have the best stock in the world, and I think Microsoft is pretty close to the best stock I've ever seen in terms of consistency. Even with a stock like Microsoft, it's gonna back off after earnings, because people are going to sell on the news. They're going to buy in the rumor and sell on the news, right? That's the old adage. I think with Microsoft, let me see if I can find. Let me look at the annotated chart for Microsoft here really quickly, so that I will give you hopefully an answer on when to possibly look at buying it back. Because I do think that you may be able to get a good bargain if you do it that way. So there we go. Okay, so that shows the day. Let me show you the daily chart on this. Yeah, we're getting it. There we go. Okay, so let me put up the daily on Microsoft. There we go. Oops. Okay, basically the last buy point on Microsoft was this 187. And it's run up, and of course we are collapsed a little bit through the 21-day moving average, but we're still above the 40-day, which is good. We're off $9.21. I would hold on this thing until it came down. I think that you can probably. I think you're going to see some strength at about the 200 level. I would. Here's what I would do. I do think it's going to continue up. The chart is definitely upward trending. Now, the relative strength is down. It's only 87. But I do think that you should probably try to put in an order right below 200. I would put in an order about 198.50 and see if you get a fill on it. I do think that there is going to be some movement there. It looks as if the low is about 201.39. I would look possibly to, here's what I would do. I would see if I could get a fill at about. I don't think you're going to get a fill at 200, to be honest with you. I think that why don't you try this? Why don't you try to see if you can get a fill? Start at about 99.50 and then start moving your increment up until you get to about 201.50 and see if you can get a fill today. This might be really good. I think this is going to reverse probably tomorrow. Or into the weekend, because it did give up quite a bit of upward. So I do think that, I do think this is potentially really good to buy back. And obviously you did that, and I think that's terrific that you did that, because I think you probably made, if you buy it back now, I think you can probably make 10 points on that easily. So that is a cool one. I'm so glad that you did that. So glad you did that, Keon. I think it's a smart move, and I think that's really, really good. That's the way to play. That's a lot of times the way to play earnings. Sometimes, even with the very best stocks, you just don't want to hold them through earnings, because people tend to sell them off when they're coming into earnings, because it's the old adage, buying rumors, selling news. So I don't think that Microsoft is going to collapse. I just think that the weak hands have been forced out a little bit, and so I do think that you might want to try to see if you can pick it up on the rebound. And I don't normally do it with normal stocks. I don't like to buy it like this. I always like to buy it on an uptick. But I think you should see if you can, see what happens tomorrow. See if it rebounds. I think it's going to rebound. I think Microsoft is going to rebound. But the question is, and you want to buy it on an uptick, so you kind of want to wait to see. To let it sag a little bit more, and then see if there's a rebound. There's probably going to be a rebound tomorrow and possibly on Monday. If this turns around and it moves up, you want to consider possibly getting in. I do think it's really a good stock, and I think you're going to win on that. Hey, thanks, Arnold. I always appreciate that. Great. If Tesla split their stock and you hold one contract, yes, they will. That's a good question. Very, very good question. Basically, it's basically the way it works, Long, is that instead of the contract being, and this is kind of, this is usually why they split in an even, even if they have contracts. Instead of having, for instance, if it flips 2 for 1, you're going to end up with essentially 2 contracts. If it splits 5 for 1, you're going to end up with 5 contracts. But if it splits 2 for 3, I don't know. I don't think you can get a half contract. I think you would be sold out of the contract. That's a good question. I've never actually had. I've always had even splits. So, but I suspect they'll probably split it in an even way. It'll be 1 for 2, or 1 for 3, or 1 for 4, or 1 for 5. I doubt it's going to be 2 for 3 with that. That would be my guess. So if that does happen, you're going to get a contract with the same expiration, but you're going to get another contract. So instead of having one contract, if it's 2 for 1 split, you're going to have 2 with the same expiration. So that's kind of how it's going to work if they do split. And they may well may split. It's so hard to figure this out, because it's really hearsay as to what's going to happen with something like a split on Tesla. So let's go to again, buy houses in Austin. I totally agree with that. I think that's very good advice, by the way. I'm holding shares, not contracts. Less stress. Absolutely. Well, here's the thing. It's true. It's easier to sleep at night if you have contracts rather than shares. I agree, because contracts, expire, and shares don't. But you can leverage a lot with contracts. So the best is to use a mixture of both. If you have things that you particularly want to hold longer term, then I recommend putting part of your portfolio in actual physical stock. Typically, I like to do like a 70-30, where I'm 70% real stock and then 20% options contracts, either like spreads or even nakeds. But nakeds you want to have as a very, very small percentage of your portfolio, just because there's a lot bigger chance that you're going to lose on a deal like that. And then you have the hybrid ones, and I particularly like the hybrid ones, where I'm buying the underlying stock and then I'm selling the call on it, and that's where I have both the call and I both have the contract and the underlying shares, and that I like those too. So, but you have to count them kind of separately in 2 buckets. But in the bucket, the way I normally structure my portfolio is to have about 70% physical stock and then 30% in the options. So, very, very good question. All right. Let's see. Next question. Do you think, what do you think of Ethereum? The cryptocurrencies, here's the way to play the cryptocurrencies. I am not necessarily a fan of the cryptocurrencies directly, but I am a fan of the ETF that covers that. The GBC is the cryptocurrency, and they hold currently approximately GBC. This Glacier Bank. I'm sorry, GBCI. GBC is what I want, I believe. Is that going to give me the right one? Okay. No. No. Oh, it's let's see. GBTC. GBTC. I'm sorry, I was wrong on that. Yeah, the Greystone Bitcoin Trust. That's the one I want to show you, and I'm going to show you the chart on the screen right now for that. This is how I play the crypto area. Is I don't want to play it directly because it's just not liquid enough. Now it has been moving up, and it's moved up. This is a relatively bullish. It's getting more bullish. The market is getting a little bit more bullish for the for Bitcoin. The reason I only want to deal in Bitcoin, and currently the GBTC owns 4% of the world's Bitcoin. So this is a proxy for the entire market. Now it has been trending up here, and that's good volume. As you can see, we're reversing. It looks like sort of a slide here. This is sort of a cup and handle, but it isn't going in the right direction. But it does seem to be coming up. So this might be a buy here pretty quickly on the GBTC. So we may be a little bit bullish on Bitcoin. I don't think you want to do an Ethereum and the other Bitcoins. I mean the other cryptocurrencies, because I just don't think they have enough float. And I don't think you actually want to own the actual Bitcoin. I think you want to go with the ETF that covers them. I think that's the best way to play it. And this is the GBTC, and I would watch this now. This is a potential buy. It's relatively inexpensive. It's only $10.40 a share. So 100 shares would only be, it'll only be about $1,000. So it's quite affordable, a way to play the crypto market. Okay, so let's see. Jim, silly question. I'm new on options. Please tell me how I can close a bull call spread. Very good question. Well, if you have what you do to close the bull call spread, and thank you, I should have shown you this, is simultaneously you the long call, you reverse it. You go buy to close and sell to close, and you do them both at the same time. So you close both at the same time, and that will give you a spread that will cost you to close that. And then of course the difference between the where you enter the spread and where you exit the spread, that's either your profit or your loss. I suspect if you want to close it, you would do that. So here's what you do when you open a bull call spread. You buy the lower call and you sell the higher call. When you close that bull call spread, you sell to close the both. You sell to close the you buy to close the upper call and you sell to close the lower call, and that will close the spread. And then once that is done, the difference between where the spread opened and where the spread closed will be your profit or your loss. So that's basically what you do if you and on TD Ameritrade. And I probably should make a video on this because in order to understand how it works, when you're trading options, there's basically 4 different choices: buy to open, sell to open, buy to close, sell to close. So there's 4 different options, and basically you just reverse what you did when you opened the bull call spread. So if you have a question about this, just send me an email at dallastradingfloor.com and just put that in the ask a question, and I'll try to get back to you as quickly as I can with a question on that. Or if you're on TikTok, I could just send me that, and I will try to get back to you with that. That's a good idea for a video, how to close a bull call spread. So I'm going to put that down here. It's show ideas, how to close a bull call spread. And if you aren't already signed up for our action trade alerts, please do that, because that way I can communicate with you and with some other trading ideas as well. It's totally free, by the way. So I just want to put that out there. All right. Next question from TikTok. Do you think Apple is over for the week? Well, let's look at the Apple chart. I do think that Apple is getting a little bit ahead of itself. I love Apple, and I was actually in it at about 240 up to about 280. I wish I had stayed in it, because it's just gone up, but you can't. You just have limited capital. Is it okay? Well, it's moved off a little bit, as you can see. Here's the thing. It's fallen below the 21-day moving average, but it's still at the it probably is going to see support at about the 350 level. I'll just be honest with you. It's got it may fall another 20 points, literally, because I do believe, because it's programmatically traded, that it may fall down to this level of support, which is the 40-day moving average. So I would, and this is a really good example of how, even with a good stock, sometimes they can change their direction precipitously. This is why you always want to have the 8% rule in place. You want to have that 8%. Now, what I do with a stock like this that's run up so much, if I'm buying it, say at a buy point, the buy point on Apple was 288.35, if you can believe that. As it moves up, I move up the stop loss with it, and I typically have a gap of about 8%. So to calculate what that stop loss is, take the price that you are at the market and multiply that times 0.93. It's going to give you a number, and then put that in as good till cancel for stop loss. And do the stop market, because typically that will give you a better execution rather than the trailing stop loss. Sometimes people have trouble with the trailing stop loss. I do not think that Apple is over with, but I do think we're going to see it move possibly down as low as 350 before it regains support. But we never know. Apple is a very, very widely held stock. There is a distribution day. I just want to tell you, because we have, you see this, we have a tremendous amount of selling activity. It's over the normal volume and with down. So I do think that it's possibly headed down a little bit. I think there was a lot of profit taking this quarter. I think a lot of funds that own it have sold it for a profit. So that's part of the reason I think that, it's probably going to regroup. But I don't think looking at this pattern that the thing is permanently headed down or anything like that. I do think it's going to continue, but it's going to have to readjust probably at the 40-day moving average, which is about 350 on that stock. So okay, do you like Clorox? Well, I like Clorox to clean with, but I am not a fan of Clorox as a company. I don't see why people get so excited about it. Yes, they make bleach, but I can go to Winco and buy Top Job for $1 a thing, and I don't see it. CLX, but let's look at the chart on it anyways. Its chart looks fantastic. I don't know why it's doing so well, but I guess it's coronavirus, and it makes sense. I guess I don't know. I'm just not a fan of it. That's not to say it's not a good chart. It's up 21 cents today. It's at 227. So in terms of the packaged goods, it doesn't really get too much better than that. I mean, it is very defensive play. So just cut my mic out there a little bit crypt in my throat. I can't really get excited about a company that sells bleach and salad dressing, but it does have a good accumulation, so it's definitely a good stock. It's right at its 21-day average, so and it potentially could go higher. It's probably one of the best NYSE stocks out there, but I'm not rushing to get into Clorox. Yeah, to be honest with you. I'm just not rushing to get into it. All right, so Apple, not stock question. Are you referencing refinancing through lower interest rates? I'm not. I have a mortgage right now. I believe it or not, I have a mortgage, and I have not refinanced it. What I've done instead is I just paying it off faster, because the refinance fees will end up being almost as much as I will. I say, well, why not just pay it off faster? And I'm probably going to pay off my mortgage here probably. I'm thinking probably this year or next. I still gonna need a little tax shelter. So, but yeah, we're in a deflationary period, at least for right now. So, if you can lower your fixed expenses right now, it's a really good thing. So it's not a bad idea to refinance to get the payments down. The most important thing is to make sure that you pay off your revolving credit, like your credit cards and those kind of things, because in a deflationary period, even though the interest rates are relatively low, it could be brutal. So that's something that you might want to put your capital towards is doing that. And also, with the new car loans, be really careful, because they can just take your arms off with those. So, my opinion. All right, GBTC. Yeah, I covered this a little bit before. This is the Greystone Bitcoin Trust. They hold about 4% of all the Bitcoin in the world. And, I think it is a better way to play the Bitcoin market, just because it has, it has a, it's liquid. If you're in it, you can be in it, and if you have to sell, you're not going to get shellacked on it. Now, here I want to show you the chart on Bitcoin Trust, because I do believe that we are still not at a viable point. I don't think this is viable until it hits at least 1355. I just don't think it is. This is something you definitely want to buy on higher highs. The volume is up. The share price is up. If you're interested in Bitcoin, this is when you want to watch this. I wouldn't be a buyer until it moved higher. That's pretty good. I wouldn't be a buyer until it moved higher. That's really what I would say on that. Okay. What is the best app stock? Wow, good question. What is a good app stock? I don't know if there's any one particular company that's the best app stock, but I can tell you, in the app space, in the general recurring revenue model space, I think it's pretty hard to beat Adobe. I know that's expensive stock, and you probably not looking for something that's expensive. ADBE. But I think they just have they've really cornered the creative market for the creative people. And I want to show you this, this chart. It's off a little bit, and I don't know if there's a buying opportunity really right now. I think it's a little bit too extended here. Right now the last buy point was 350.48, and it's now at 431. It's a little bit high. It's a little bit high. I think we're going to see it come off there a little bit. And guess what? We sort of do have, it looks like a little bit of a head and shoulders formation. We may see a drop in this one, but there's nothing wrong with the company. It's a tremendous company. It's just I can't really buy it. It's just it's moved up. There was a 25% profit goal. So I just don't think you can buy it right now. Unfortunately, it's a great stock, but it's not viable right now. Okay, Zynex is getting hammered. Buy the dip. No, never buy the dip. Never, ever, ever buy the dip. This is a very, very bad advice that's given by people on Wall Street who want to protect their position. They don't want people to realize that they fucked up. Never buy dips. Never, ever, ever, ever buy dips, because you don't know if the dip can turn into a crater. That's why you always buy on an uptick. Always, always, always buy an uptick. Okay, so let's look at Zynex. And God, I recommended this one too. I was shaken out of this one. I was shaken out of this one. And I had my stop loss. It went down 8%. Boom, I was out. And yeah, this has definitely gotten shooken out here. So let's look at it. Support, but shares, yeah, below 50. Okay, so there's some support, but it's even gone down. So it still has a 96. Yeah, if this one unfortunately has broken down, and I think that with the volume of 41% and down, there's sells going on here. This is being sold. Yeah, institutions are selling this right now. So if, again, this is why you always have that stop loss in there. So if you do have a breakdown in the stock pattern like this one did, you're sold out. Yeah, unfortunately, this just doesn't look like a good chart. I apologize, but I think you need to be out of this one. And hopefully you had your stop loss, and if you did, then you're okay. Then you're okay. Okay. Through on Intel, since it's down 10%. Yeah, you kind of got to do that. I mean, it's tough because it's even great stocks have their season. INTC, Intel. I love Intel, but I think it's seen better days. The problem with Intel is that it's a big company. It's always done well for many, many years, but there's just other better choices in this space. I mean, I think I think Qorvo is better right now. I think Skyworks is better. I also think that AMD is better, and I have I'm gonna. By the way, everybody that signs up for the trade alerts, I'm going to come out with a buy on AMD, but that'll be on tomorrow. That'll be a bull call spread. But I want to show you why you shouldn't buy Intel, and you can see it's going sideways here. Not a bad stock, but just not the chart pattern you want. And then I'm gonna compare that with AMD, which has just moved right at a buy point. Yeah, okay, it's come right down to the buy point at 58.10, so it's 59. This stock is incredibly buyable, and I'm going to be coming out with a trade alert on AMD probably tonight or early tomorrow. AMD, I suspect, is going to see support right about where it is right now, and I think it's possibly going higher. This is a cup with handle formation. The handle's a little bit long. I do think that with this 90 relative strength, there was quite a bit of buying yesterday and then selling. This is basically people changing out positions. I do think we're going to see support at about this 59, 50, 57 or so level, a little bit below that maybe, but I think we're going to see support there. And I do think with this chart pattern, it is more than likely going higher. AMD is going higher. So if you're looking at the semis, AMD is right now the better choice relative to Intel. And I'm going to be coming out with a trade alert on it. And so hopefully that'll be something that you could benefit from. NNN seems to be struggling from okay. Let's look at NNN. Yeah, the COVID thing is bad because it just reduces the revenues for everybody so much. And this is national retail properties. Yeah, this is the area, by the way, everybody out there, please do this. You don't want to be in any of the REITs. I mean, sure, there's some REITs that are good. There's one called Innovative Industrial. I think it's they do marijuana grow rooms or something like that. But the REITs are not the place to be. This is going to be even worse. This is national retail properties. Folks, online is taking over. Retail properties just aren't cutting it. I mean, malls are. I mean, General Growth Properties, which was the biggest mall operator in the United States, they went under. Simon Properties is under siege. Even this is national retail is under siege. If you want to be in the real estate space, which I don't recommend, there's only one ETF that I like. It's it's a Sam Zell special. He's the biggest guy in town. It's called Equity Lifestyle, ELS, and I want to show you the chart on Equity Lifestyle. It's not bad, it's not great, but they're invested in mobile home parks, and by the way, that is the most stable market right now in the real estate business, if you can believe it. So I want to show you equity lifestyle. If you're interested in real estate, says I'm not recommending. I'm not in real estate right now. I just don't think it's that good. And this is one of the best charts out there, and it's not even that great a chart. So I think you need to steer clear of the REITs. I think you need to steer clear of the commercial properties. Now, there is also one other bright spot. I do think the home builders are good. I think KB Homes is pretty good. Let me look at the chart on KB to see. KBH is their symbol. KBH, is that right? I don't remember all the symbols, unfortunately. Yeah, KB Homes. Okay. And this shows an uptrend. So if you want to be in the real estate market, you want to be with the home builders. KB Homes is one of the better ones. This is not the greatest chart in the world, but it is showing an upward trend. And I wouldn't be in this. I wouldn't buy this until it had been at least 36.81, showing a breakout. But the home builders are good. Anybody with commercial property, I think you want to kind of stay clear of right now. It's just not a good time. 2 months ago, you're saying the buy point for AMD was 59. Is that still true because it's at 60? Yes, and I'll show you the chart on it again. Let me just go back. I'm glad you brought this up because this is important. Sometimes it takes, and the thing about AMD is it tends to be a bit of a laggard. It doesn't seem to move that fast, and I want to show you why that was. I'm going to show you a marked up chart here to show you basically why I was saying that. Okay, here is the chart that is annotated for, and I'm going to show you the weekly chart here for AMD. So about a month ago, as you can see, we were right about at the same level here. We were about, this was the entry point at 58.73. We're currently at about 59. This is a cup with handle formation. There is support, and we are, we're right on the 40-day moving average. Now, I want to show you the daily chart, for the actual entry. We have the 21-day moving average. It's come above the 40-day. That is a bullish sign. That's why you want to wait. You want to wait till an uptick. You don't want to buy it right now because it's down. But if this thing turns tomorrow or possibly on Monday, and you see an uptick on this is a buy about this 59.10 buy point here, and it's a buy point up from 59.10 on up about 5%. So this times 1.05 is going to give you the buy range. And as you can see, it's sort of fighting it out here in this area. You don't want to buy it, we want to buy it pretty close to 60 or thereabouts. We don't want to go much above that because we haven't totally seen it totally move to another level. It does have an excellent chart pattern and it is likely to go higher, but that is why it has kind of been sitting out here, as you can see, practically for 2 months with this same buy point. It's just kind of gone down, it's meandered, and it's started going up. And so it needs to clear this 59.10, which it has at 59.59, but we want to see if we're going to see some more support. So make sure that it's on an uptick with high volume. The volume is strong on this, but again, I think it's coming right to the buy point here. So if we see action, if we see upward action off of the buy point of 59.10 tomorrow and possibly on Monday, I think that it may be a buy. We want to buy it as it is accelerating out of the buy point. You don't want to buy it when it's on a downtick like it is today. But so wait on this one. This is one of the reasons I did not send out the trade alert today. When I looked at the stock, it was downward trending. You don't want to buy on a downward trend. And but it's essentially stayed the same. So here's the thing about AMD. AMD is a little bit tricky. I have not really made a whole lot of money on AMD as a stock, but I still think it is looking very good. Don't buy insurance. Don't buy finance or insurance. Boy, is that a good. That is very. Thank you for that. I think that you're absolutely right. Finance companies right now are not doing well. Now, there is an alternative in this area, and that is companies that are fintech companies. And I am, and again, I sound like Captain Obvious here, but I recommend in the fintech space, PayPal. I do think that this company is the new MasterCard. And even it's down a little bit, but it is still, this chart is still really nice. Let me show you the chart for PayPal right here. Okay, With PayPal, we're seeing a it's broken below the 10-day. It's moving up right to that again. So I do think that we're a little bit extended from the buy point. The follow-on entry for PayPal is 160.99, so about 161. It's a bit high at 173. So if it does show, watch this one that's not ready to buy yet. Let's see if it comes. Let's see if it moves up from here. But I wouldn't buy this one. The buying range for this one is 161 times 1.5. That'll give you the buy range for this. I wouldn't buy it outside of this. I wouldn't buy this. I wouldn't buy PayPal Extended, but I do think the stock is a quality stock, and I do think it is definitely in the next few months going to go even higher. NVIDIA at buy point. Let's look at the chart on NVIDIA. This is one of my favorite stocks too. I've done very well with NVIDIA. If you look back at some of my older videos in about the March timeframe, I was recommending this when it was about 240. I wish I had held on to it. I wish I had ate my own dog food on this one. I didn't. I sold when it moved up. NVIDIA has just been phenomenal, and I think it's going to continue to be phenomenal. Yeah, here we go. Okay, so we've got a 380 buy point. It's at 405. Wow, it technically isn't buyable at this point, but I do think that this is one of the quality names. We have a first stage base here. I think we're going to make a second stage base up here, but it hasn't developed yet. So it's not the right time at this moment to buy NVIDIA, but you want NVIDIA on your watch list. You may have to wait several weeks on this. You may have to wait 2 months on this, but I do think we're going to see another, because of this action in here, I do think we're going to see another base form. And once we do, then you want to buy it. I think it has the potential for going higher, but right now it is not a buy. It is too far extended from its buy points. So that's my that's my take on it. The buy point, the highest follow-on entry that we have is 380.10. So that's the highest follow-on entry that we have. So you don't want to buy it anything above that. I mean, it's the follow-on entry times 1.05. That gives you the buy range. Don't buy this extended because it potentially can come down a little bit on you, and you don't want that to happen. Well, I have wasted another hour of your time. I so appreciate everybody coming by and taking a look. It's so much fun for me to go through the charts with everybody. If you have a special question that you'd like answered, just contact me through the website, Dallas Trading Floor. Ask a question, and I'll try to get to it as quickly as I can. I'll be on tomorrow at 2:30 again, and then on Monday as well. So happy trading out there, and everybody stay safe and make sure that you wash your hands because of the COVID. Don't get caught with the COVID. Anyways, for everybody on YouTube and TikTok, here we go. See you.